Hello and welcome to another update video about RNDR. RNDR has now dipped into the support region. I think we talked about that in the last video. In between, it started to look a little bit like a triangle pattern here, but overall the wave count hasn't changed, the structure hasn't changed. Literally, we've only really just reached the support zone that we talked about in the last video for this wave 4 correction here. And the support zone is between $6.74 and $9.46. The support zone is located between the 23.6 FIB retracement and the 50% FIB retracement. That's common, and that's common for a fourth wave. And the idea is that in the primary scenario, in the preferred scenario, we should get one more high in wave 5 of C of 3. Before a larger fourth wave should start, and then with a fifth wave, possibly a larger ABC structure could complete. We've labeled that as an A wave, a B wave pullback, and a C wave rally, and that C wave rally might get one more high to $23. At the moment, it's possible that we are still within this C wave, especially as long as the support levels are holding. Now, in the alternative scenario, the larger degree third wave already completed here on the 18th of March, and the larger degree fourth wave is unfolding right now. And then support would be $5.17. So how can we distinguish between the two? Well, there is one key pivot, which is the $6.74 level. If that level breaks, I have no choice, and I have to assume that wave 3 topped already here on the 18th of March, and the alternative count is playing out. So the main question here is, how deep is the pullback going to be that the market is offering? Is it holding the 674 level? Then I would argue it's probably the smaller degree fourth wave, and we make one more high in wave 5 of C of 3. Then we get a larger 4 and then a 5, but below 675, 674, 675, I have to assume this is already the larger degree fourth wave. And then the support is down to 517. Below 517, I have no reliable bullish support level left, however, because a wave 4 shouldn't really break below it. I mean, I have labeled it as a diagonal pattern, but still we are here in terms of diagonal, we have a wave 1, a wave 2, wave 3 still unfolding. So it's actually the wave C of 3, which is not labeled as a diagonal. The entire pattern in the larger C wave is labeled as diagonal. Yeah, that C wave that started in September last year, but not here necessarily the C wave in wave 3. Remember, in a diagonal pattern, the subwaves are corrective, so we're dealing with ABC structures in the subwaves. It's a bit of a messy structure anyway, but so far it's been holding support. This one was a bit of an annoying one because it was an extremely shallow pullback here in January. But so far support levels have been holding, and there is no sign that this upside continuation is, let's say, in danger, at risk. No, it looks as if we should get one more high or two more highs, and the next upside resistance is at $13.20, and the next upside Fibonacci target is at $23, and above that level 32. That's my update about RNDR. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.